What? The S&P 500 is only up by 2% since early September? Have the 4 AI stocks shared in early September outperformed the S&P 500? What about the bonus stock that was shared in late September? In this video, I aim to conduct a review of these 5 stocks and discover whether they have brought outsized returns against the S&P 500. Welcome to STA Club, where you'll find stock trading and analysis content. To stay updated and to be the first to access these valuable resources, hit that subscribe button now. By subscribing, you are opening the door to a world of trading and maximizing your potential for success. I know that you are eager for this review, but I need you to be clear that this isn't a stock recommendation. This isn't a buy or sell call too. Stock Review 1. Apple. Apple's share price was still dropping when it was shared 2 months ago. Can you remember why? That's right, a bullish divergence appeared. The appearance of a bullish divergence meant that there was a high chance of its share price rising in the near future. Hence, I was still hopeful about its shares. Its share price flew higher than I expected. A bounce did occur before it dipped below $175. I was doubting my analysis until it rose above $175 again and eventually crossing the $190 mark. Whew! Did you buy any shares of Apple? If you had sold it for $190 last week, congratulations! You have made 8% before fees. Do you remember that trend lines are diagonal support and resistance zones? I've done a video on trend lines and you can watch it in the description below. Apple's share price seems to be reacting off its lower trend line. Could this be a sign that a reversal is here? Looking at its RSI value of 66, I think so. Verdict: did the performance of Apple's share beat the S&P 500? It is a resounding yes. Stock Review 2. Alphabet Class A shares. It's a pity that there wasn't a second entry for Alphabet's shares. After the first entry in late September, Alphabet's share price rose fast and furious to $141 without skipping a beat. Sadly, a second entry never came. But that's okay, because you are still up by 6% before fees. While the share price of Alphabet is up 6%, many of its peers are up by a larger margin. This means that its shares are losing momentum, so you may want to reduce your position in Alphabet if it drops below $135. Verdict: did the performance of Alphabet's shares beat the S&P 500? Absolutely. Stock Review 3. Nvidia. Did you survive the roller coaster ride Nvidia's shares brought? If you had bought its shares back in mid-September, you would have experienced 2 weeks of losses before experiencing 2 weeks of gain, and yet again another 2 weeks of losses before its share price shot up to $500 in a straight line. There's a saying that goes, behind every success, there are many struggles. Congratulations to you for catching Nvidia. You are up 14% before fees if you had sold it at $500. Now, if you are still holding on to Nvidia's shares, you may consider selling them for a profit as soon as possible. This is because I see signs of its share price consolidating between $407 and $500, shown by the rectangle in yellow. Verdict: did this performance of Nvidia's shares beat the S&P 500? It totally crushed it. Stock Review 4. Tesla. At this juncture, all the above-mentioned stocks have risen way above your entry price. Is that the norm? Of course not. Tesla turned out to be a loser. Its share price dived 22.8% from our entry price of $252 before recovering to its present price of $236. I had briefly shared about the need for setting a stop loss in my earlier video. I will place the link to that video in the description below. What are the benefits of having a stop loss? Benefit number 1. Protecting your trading capital. A stop loss makes it easier for you to recover from losses. Imagine, your stock drops by 50%. This means that you'll need the stock to rise by 100% just to break even. Benefit number 2. Managing your risk. Stocks can easily drop by 50% or more. Do you remember the performance of technology stocks in 2022? You won't want to go down with your trade. Benefit number 3. Optimizing your opportunities. A stop loss frees up your trading capital and allows it to be allocated to other potential winners. Benefit number 4. Freedom. When money is involved, logic and discipline fly out of the window. Having a stop loss enables you to be disciplined in your trades, freeing you from mental and emotional stress. Okay, back to Tesla. If you are still holding onto its shares, lucky you. It has partially recovered and the loss you are facing is about 6%. From its price movement, I have serious doubts about its ability to rise to $290. Verdict. Did the performance of Tesla shares beat the S&P 500? Sadly, it did not. Stock Review 5. Visa. How have the shares of Visa performed? Visa's share price dropped to $227 and rose just as planned. In just 2 months, its share price had reached the predicted price level of $249.50. Now that's an 8% gain. If you are still holding on to its shares, you may want to sell them as soon as you can. Why? Its RSI value is 72, which is very high. A reversal could occur sooner than later, and I'm sure you would like to enjoy your gains before it evaporates. Verdict. Did the performance of Visa shares beat the S&P 500? Oh yes, they have. In closing, we are fortunate that 4 of the 5 trades were profitable in a short period of time. Which stocks did you enter? Let us know in the comments below. By adding the gains, these trades have brought you a gain of 30% in 2.5 months. If I could annualize this figure, it would mean a return of over 100%. Trading can be highly profitable if you know the counters to look at, employ stop loss and take profit levels, and have a framework to rely on. Like and subscribe to our YouTube channel to let us know that you want more such content. We aim to provide you with more high quality content that's tested and proven to help you to become a smarter trader. Thank you, and we'll see you in our next video.